So closing the day back at gamma neutral, but still a bit down from the market makers expected move. We got a breakdown from the consolidation that we were going through from like last Thursday, and we have closed below monthly gamma neutral and weekly gamma neutral, but above delta neutral, which we did lose briefly today, but regained with a small bounce and a relatively weak one off of the long-term technical level around 57.67. We did set a low there. We may revisit that level if this bounce fails, and at which point we could start moving down to a more bearish confirmation, which is out at 56.69. You can see that out here on the, let's go out to the weekly. It's a little bit better. So we got that 57 test, small bounce, but we could still lose that trend here on the weekly. Failure there, we'd then be looking out to 56.69 here. A failure of that would confirm a breakdown, and then we could move down as low as like 59.30 or even 5100, possibly lower than that, should it continue. But this is the beginning of a breakdown from the ascending wedge, and we're moving to test like the EMA 30, so that's probably the next level where I would look for a failure. The MA 50 is like right at 56.69 anyway. So that kind of works out. Failure of the 50, we'd be looking to the long-term trend to the downside for a test around 50, 55.20, 54.46. A loss of that, you'd be looking out at the 200 MA or the lower long-term trend, which is around 5200, and then falling back into like July of last year's wedge, a loss of that could be like 4100, 3800. But that's just the technical shit, right? That's a long way from where we are. First, we want to focus on weekly delta neutral, and then delta neutral on the monthly, which is out in like the 5300 range. So very, very far from any of that actually happening. Commodities, down 50 points on the day, but relatively flat and closed above support. So that's kind of nice. Agricultural commodities were overperforming a bit today, but oil and base metals down, precious metals down. Industrials had some mixed results, but largely, I mean, I would say, yeah, some flows into commodity like agricultural commodities, but everything else pretty much selling off, bonds and equities alike. The only thing that appeared to have a lot of long interest was volatility. Dollar continued to rocket, 104.39 here at close, up against the euro, the pound, and the yen, and just a little bit the yuan, which is now currently over the projected level set by the PBOC, which I believe was 711, or 712, sorry, which means we may start to see the Chinese come in and buy into the bond market, and that could possibly stop this constant upward pressure, at least in the like 2, 5, and 10 year. However, with President Xi's announcement of alignment with Iran's sovereignty interests today, they may not be moving forward with buying U.S. Treasuries as they normally would. Usually they're buying U.S. Treasuries to offset the fact that nobody is converting their dollars back to yuan, right? And so the Chinese corporations are just holding the dollars because the value in the yuan is dropping, and they obviously don't want that. So they've instituted a bunch of programs to try to keep companies from doing that, and it was working for a couple of weeks, but then U.S. yields started to skyrocket again, pushing the dollar up, which pressures that system. Correlation really moved up pretty hard today throughout most of the day. It turned back around at the end, but still a much higher low here, and definitely nowhere near where we were as far as pushing dispersion, even last week or earlier this week. Leverage in the carry is almost up to 8x. We're getting really close to moving back to that all-time high, around 9, so not too far from there. And then now leverage has started to pick up in the short end of those as well, on the 3 and 6 month. Forward yield on volatility is staying positive. Obviously, I think with today's move, we're going to continue to see bond volatility stay elevated. However, correlation is now on the 3 month is now starting to come in line with the rise in bond volatility. Skews continuing to drop, so we're starting to see some more tail risk hedging picking up, more out of the money bought puts, more bearish positioning. 54.67% of the S&P above its 20-day moving average, so still just above half, hanging in there, but the weakness seems to be pretty much across the board, right? It's in tech, it's in small caps, it's in mid caps, it's in industrials and manufacturing, and it's in oil and gas and energy and health sectors. So it's just kind of like everything is being sold off right now. Correlation between VIX, cash VIX is rising but down from yesterday. So still up from last week, but a little bit down from yesterday. Some of that short vol looks like it came in, kind of towards the end of the day today. Fed fund futures pricing in 81 points of cuts into June of next year. That continues to trim back, but we probably won't see any significant moves in it until Friday, when we get durable goods. Tomorrow we have PMI and we have a tips auction, both of which are probably pretty important. But given the outsized effect, German data lately, I believe Germany has their PMIs in the morning, which are expected to remain flat. However, if we see German PMIs contract and EU PMIs continue to contract, that may spur yet even more interest in the dollar, especially because the euro and the pound have been so weak against it over the last couple of weeks. We also have jobless claims tomorrow, I think, and then jobless claims. There's a Fed speaker after jobless claims are before market open. So is Chicago National Activity Index, which is expected to rise. PMIs and new home sales after market open. Kansas City Fed is reporting. We have a 4 and 8 week bill auction, and then a 5-year tip auction. I think the 5-year tip can be important, especially if we see it start to go up. We're going more and more indicators that the bond market and everyone else believes that economy is rising, and it's rising rapidly, and that the current figures reported in seasonally adjusted numbers are inaccurate, which we said when they adjusted them back in May, and it's still true. So here we are, and those will get readjusted back, and when that happens, we'll probably get a more accurate reading on inflation. We do have Tokyo CPI tonight, which is not super important, but if it's excessively hot, it could be. Oil prices have been kind of modulating, and durables demand has been down. So I don't think Japan's getting really hammered with import costs right now. However, oil's had enough spikes over the last month that it may come in higher than expectations. If it does, Tokyo CPI is more of a leading indicator for their following CPI report, because it's just one region. But if inflation in Japan is starting to look hot again, that's going to start to pressure the Bank of Japan to normalize rates at a quicker pace, which for the time being, they're probably going to avoid until their general election is over, shortly after the next BOJ meeting. So if Japan is going to raise again this year, which is, still being priced in, I think 0.08%, then it's probably going to be in November, December, or December. And I think we also have a PBOC 1-year lending facility announcement tonight. That might be kind of important. The 10-20 spread is starting to collapse a little bit today. Oh, Tesla. What's Tesla doing? Up 6% in after hours. So I assume they beat on EPS and revenues. A little bit above the expected move. That might trim back under 26 before morning. If it doesn't, probably bullish out to 50 tomorrow. I'll take a look at it tonight, and if the chain looks good to squeeze off calls following earnings, then could be an opportunity to pick up some calls on it into the end of the week, end of the month. 72 cents earnings versus 58 expected. Rev 25.18 versus 25.37. Oh, so revenues missed? Huh. Okay, I might not hold all of its gains overnight then. I guess we'll see what happens through the call, but Gamma Max is still quite a bit out of the money. There's like another $20 of upside. Anyway, that's it. Thank you guys so much for hanging out. I will see you tomorrow morning. Later.